Hey, Think Realty, thanks so much for joining us on the Think Realty podcast today. I'm Eddie Wilson, the founder of Think Realty. Founded this over 10 years ago because I'm a third generation investor and wanted to bring all the great information, content, and data, and also resources and people to you that I had in my world. And it's been going fantastic. Over 1 million people touch the platform on a monthly basis. It is a fantastic opportunity for you to just continue your journey. And joining us today on the podcast, we've got a great guest, which is a big portion of what we do, which is connect you with great people to show you great opportunities. And we'll get into that in just a second. But I want to say a quick thank you to our podcast sponsor, which is Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investment. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Today, we've got a great guest that's going to give you an alternative look at maybe a space that you've never looked at. And today, our guest is Troy Eckard. Troy, thanks so much for joining us on the show today.
Thank you so much for having me. I really appreciate it.
Glad to have you. Now, where are you joining us from today?
I'm in my office in Allen, Texas, which is in the Dallas-Fort Worth area.
Allen, Texas. Very good. Awesome. Well, I am so glad you joined us because I know in the real estate space today, a lot of real estate investors, we've got a lot of sophisticated, savvy investors that listen to the podcast that have their eyes up. And the reason they have their eyes up is because the returns that they've been expecting and they've been generating over the past 10 years are not the same today. And so their eyes are up, they're looking at other opportunities. And I know that that's a space that you deal in. So if you don't mind, just talk to us about Eckard and what you guys do, and then let's dive into the concept of investing in mineral rights.
Oh, absolutely. And thank you. It's very simple. We're in the real estate business as well. We just happen to have all of our real estate below the ground. So oil and gas mineral rights are traded, deeded, and titled in the courthouse, just like surface rights. But what we've done is we've identified sellers in major oil and gas geological areas of the country that they themselves recognized, hey, I want to own my ranch or my farm, but I need to figure out how to monetize my investments or my assets. So what they do is they sell some or part of their mineral rights to buyers like ourselves, which then gives us as investors the opportunity to have tenants, which are major oil companies, pay us income every single month for the oil and gas that's produced. So it's a brand new, really relative asset class that's evolved over the last 10 years. It used to be for institutions. Now it's for private investors. And because of that real estate component, you can use 1031 and self-directed IRAs just like traditional real estate. So it's been fun watching the market learn about and be educated on this space.
Yeah. And to what you were just saying a second ago, it is relatively new to retail investors, correct? What was the genesis and why all of a sudden did it come to the marketplace for the retail investor versus just, being segregated to the institutional guys?
I think it was two things. It was risk mitigation and technology. So the technology allowed what used to be very hard to find successful oil and gas wells drilling with old technology. Because of the new technology, horizontal drilling and fracking, we went from 60% successful wells and 40% dry to now it's like 99% successful wells. But the second part of that is really the fact that we really had very few areas where the mineral rights actually had oil and gas under it. We now discovered that these buried huge geological features the size of the Grand Canyon are now covering 200 million acres saturated with oil and gas minerals. So the institutions went out and bought all they could. They started in 2010, private equity. They gobbled as much as they could. They didn't even touch maybe 3 or 4% of the opportunity. So that allowed Eckard to start saying, how can we play in the big boys game by aggregating high net worth investors, putting together portfolios. And over the last 5 years, we now have about $750 million in minerals paid for. We're generating about $75 million a year in cash flow from those minerals. So we played a big boys game, but we did it with good strategy, low risk approach, and by being smart enough to say aggregation of capital can be a very strong component to successful investing.
So if I'm sitting here with a bunch of assets, that I own, I've got cash flow, I've maybe got some cash I'm looking to invest. Why should I consider this as an asset class for me to go into, right? Like maybe I already know multifamily, I already know single family. What are my benefits? Now, I mean, obviously the return is going to be a benefit, but are there additional benefits, tax benefits, or are there anything like that I could take advantage of?
Yeah, absolutely. The benefits are the following, that when you take a look at traditional real estate, you do have holding costs. You got property tax, you got maintenance, you got refurbishment, you got insurance, et cetera. Owning a mineral right, it's 100% without any liability, environmental, drilling, cost, capital. So it allows you to maybe de-risk from some uncertainty and leveraged assets to saying, I make one investment in mineral rights, I never write another check again, I never get a bill. It's cash flow every single month. The second thing is the risk component of your tenant credit worthiness goes away because the oil companies that develop and drill the wells in our minerals are Exxon, Chevron, Oxy. So we have the largest oil companies, smartest oil companies in the world, developing our mineral rights for free. I'm not worried about getting paid. I'm not worried about competency, and I don't worry about any costs or expenses. From a tax perspective, 100% of the income that's generated from my oil and gas, which gets paid out every month, gives me 12 distributions and a single 1099 at the end of the year. But I only have to pay taxes on 85% of that. The federal government realizes we're depleting a zone, so they let 15% of our income be tax-free. The fact that it's also 1031 acceptable means that I can go into and out of minerals back to traditional or vice versa. And I'll be candid with you, I think probably 85% of our investing partners today are heavy, sophisticated real estate, traditional real estate investors who looked at the 1031, the conversion, and the value add of minerals as saying, this is a great addition to my normal real estate portfolio.
You know, that's a great point. I get the call at least once a month from one of my buddies in the real estate space that is exiting a large property, and they've played this 1031 game for so long. They just keep going up and up and up and up, and the assets keep getting bigger, bigger, bigger. And then they start taking larger risks because they're getting into deals because it's the only one that fits the criteria in order to put their 1031 into the next deal, right? Because they're just kicking that can down the road. So I love that concept, the fact that a lot of these guys that are exiting, and there's a lot of people exiting out of great assets for various reasons, in the next 12 months, that this could be a great place for them to 1031 their dollars into without having to worry so much about the asset that they're going to 1031 into, which is fantastic.
The other thing that we offer that a lot of the traditional real estate does is you're normally looking to move a 1031 into what I would call a proven property, cash flowing net operating income. We're buying proven producing minerals, but they're underdeveloped. And what that means is the oil company might have drilled 1 or 2 wells. It's got cash flow from day one, but they're going to go out and drill 5, 10, 20 more wells free of charge. So we take those income sources from maybe like today, we got a portfolio with 253 wells in it. Well, they're looking to drill another 30 wells, which is a $300 million capital investment we get for free. Yeah. So that allows minerals to not only have cash flow within 6 months of buying it, but you're talking 25 to 50 years of cash flow every single month for almost 2.5, 3 decades. That's pretty powerful when you're looking to move your risk component and establish a cash flow for a long period of time. Very, very important.
Let's talk about... we've got, you and I, right before we jumped on, we talked about, fossil fuels versus mineral. Do you mind just kind of walk me through back what you were speaking about even before we got on the podcast specific to that topic?
Yeah. So what happens is that the free markets is pretty free because they always go to what's best in their best interest, right? Mm-hmm. The case of the climate change and green energy, it's something that needs to occur. We need alternative energy because it's better for the planet. And it's better to have more than one choice. Mm-hmm. The unfortunate part is everything in your office, everything on this screen in both our offices is made from a barrel of oil. Mm-hmm. So although we can use wind, solar, hydrogen to help dilute or minimize electrical, car transportation, the fact of the matter is the entire world is using more and more combustible materials from fossil fuels. So one of the things that happens is that we swing left to right based on policy. We forget that policy is simply an intention of a direction to be taken. The consumer is going to reel that back in and say, that was a great idea. We can't afford it. Mm-hmm. So what we've seen the last 5 or 6 years is we've seen about $7 trillion committed to green energy and conversion. And now it looks like that has all been pretty much for naught, because at the end of the day, wind and solar require oil to be at $150 a barrel for it to be economical, unsubsidized. That means we've starved the oil and gas industry of capital. So the oil companies have to buckle down. They're surviving on cash flow, not borrowing as much. They're limited on their growth, yet demand has increased by 3 million barrels a day. These are just funky numbers. You really don't get them. But here's what I'm going to say. It's economics 101. Demand is up. Supply is down. No new money. we've got a problem. 100% of every breathing human being in the United States will use a barrel of oil. The homeless guy, when he writes on that board, say, we'll work for food, just use a cardboard and ink made from oil. So I like owning an asset that has no liability, billion-dollar tenants delivering me a check every single month. I am first on the food chain list. I absolutely have no expenses, no bills, no holding costs. And more importantly is I always get paid, even if there's bankruptcy. The money of royalty income to you and I as mineral owners is above bankruptcy. I don't know of another asset that does that for you. Now, this is only because it's evolved in the last 10 years. It was not available really of any size to private investors. It was always institutional private equity. But this is a 200 million acre play. They've eaten all they can eat. Now we get our turn at the buffet.
Yeah, very, very good. You make a very, very compelling argument. I've never heard it put that way, and that's fantastic. Can I ask you just the question I'm sure every real estate investor that's sitting here listening is going to ask, and that is, what are the rates of return? What can I expect as an opportunity for the investment? And then second, follow up to that is, and am I qualified, right? Like, is this just for the accredited? Is there, kind of a stipulation to get in?
Yeah, our company, Eckard Enterprises, only works with accredited investors for various reasons, but that's all we've done for almost 40 years.
Yep.
And the fact of the matter is this investment, we've been very fortunate that we built a financial model that allows us to achieve, in this case, we're averaging 16% cash on cash returns across almost 100 portfolios. We have about $750 million of minerals acquired. This year in 2024, we'll send out somewhere between $75 to $100+ million in cash flow with no fees, no equity reduction, no back ends. It's straight up direct ownership. The key for us has been we only buy minerals that are producing from day one. We only buy minerals that we expect from what we know at the time of purchase will generate at least a 10% up to 20+% return. And then our model is based on very hyper conservative numbers like $70 oil, $3.50 gas, blah, blah, blah. And what that really means is we have been able to utilize our expertise to put together a portfolio of minerals that a traditional hardcore real estate investor who's used to financial models and touch, see, kick, and feel can look at what we do and say, these guys are way underestimating. These guys are way under promising and over delivering. And the reason for that is our number one mantra here at Eckard is we don't want to lose a dime. We do not want to lose a single dime. We should never worry about that in mineral acquisitions because the fact is it's the lowest asset class of risk in the entire oil and gas industry.
Very, very good. Man, I appreciate the time today. You have boiled a lot into this short segment, and you've made it very compelling, I'm sure, to a lot of our investors to come check you guys out. What's the easiest way for them to find out more about you, vet you, look at you, go online? How do they find you?
Well, two things. I want to highly recommend you go to our website, which is www.eckardenterprises.com. We spent $2.5 million building the only alternative asset app that exists like it does. It's called Eckard Insights. You can sign up if you're non-accredited or accredited, you can sign up. It does give you hours and hours of education. But by signing up, you're going to see not only the transparency of what we do, you'll learn what oil and gas mineral rights are. Now, it's important, though, because if you own real estate that's in areas where they're drilling, you might want to keep those mineral rights when you sell your surface real estate. You didn't think about that before. And if you're interested in mineral rights, well, it's going to be so much information on education. You're going to know that one of our key elements is the smarter you are as an investing partner, the better it is for my business. And that's how I've done it for 40 years.
That's awesome. That's awesome. And they can just find that app on the App Store, whether it's Google Play or Android.
Correct. It's called Eckard Insights. Yes, sir. That's correct.
Eckard Insights. Thank you so much for joining us today. Huge, huge value to our listener. As a listener out there, I'm sure you found value in that as well. Go check them out. See if this makes sense for you. And thank you so much for joining us on the show today.
I really appreciate it. Thank you for the time.
Appreciate it. Yep, absolutely. One more quick thank you to our sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket than take it out. We would like for you to go check out Real Property Management, and they provide a higher standard of property management that will make sure you're maximizing the return on your investments. You can experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. If you have not already signed up for our Phoenix Think Realty Conference and Expo. We've got a great show lined up for you on March 28th and 29th in Phoenix, Arizona. This will be the first time in 2 or 3 years we've been to the West Coast, and it's going to be a great show. We've got literally 16, 17, 18 people coming out to help educate you in all the various asset classes. Maybe we can get these guys at Eckard to come out and talk to us about mineral rights, help just diversify your opportunities and making sure that you're making very, very sophisticated, information-driven decisions with your dollars. Very, very important. But you can come out to the show and you can get buy one, get one free tickets for being a podcast listener. If you go to thinkrealty.com, go to the event, put in the word podcast. It'll give you a buy one, get one free, so you can bring a guest, a friend, a spouse, an investor, whatever you want. Bring someone with you to enjoy the show. We'd love to have you out there on the 28th and 29th of March. If you haven't picked up the latest Think Realty magazine, you can go to the Barnes & Noble store nearest you, pick it up off the shelves, or just go to thinkrealty.com, order it directly to your house, get it, read it cover to cover. Fantastic information. We've got great authors in there each and every month. Thanks so much for being a part of the podcast today. Make sure you stay tuned, and we'll see you soon.